Dear students of class 11 and 12 business studies, Assalamu alaikum. I hope you are fine at this emergency level. You are staying to your home with your parents and family. Dear boys and girls, you know, recorded class is going on for the syllabus of pre-test. That is the subject of accounting second paper. Today, I have come back to take a new lesson for the chapter of 6. That is the name of analysis of financial statement. In general sense, this is the name of ratio. This is the lecture number 1 for this chapter. So at first you have to know learning outcoming of analysis of financial statement, that is ratio analysis. Number 1, have an idea about the ratio. Number 2, have an idea about the ratio analysis or financial statement analysis. Number 3, able to calculate the ratio from the stem. Number 4, able to take the correct decision making of a future plan. Number 5, able to know about the current assets and current liabilities, long-term asset or liquid asset, long-term liabilities, fixed asset, capital employed, and fictitious asset. Number 6, able to know about the standard of different ratios from these chapters. Dear students, now I can go to our new lesson for the subject or subject matter of ratio. What is ratio? In general sense, ratio is the relationship of one item to another expressed in simple mathematical form. I repeat again, in general sense, ratio is the relationship of one item to another expressed in simple mathematical form. In broad sense, the term ratio refers to the numerical or quantitative relationship between two items or variables. Another definition of ratio analysis or financial statement analysis. In common sense, ratio analysis is the process of identifying the financial strength and weakness of the firm. In accounting sense, that is the current sense of financial statement analysis, is the process of understanding the risk and profitability of a firm, business, sub-business, project through analysis of reported financial information, that is income statement, financial position, by using different accounting tools and techniques. Dear learners, you can write it in your accounting copy, the definition of ratio and ratio analysis. Now you can go to the next slide. It is available. Classification of ratio on the basis of objective. How many types of ratio on the basis of objective? Totally 4 types of ratios on the basis of objective. Number 1, short-term solvency or liquidity test ratio. Second one, long-term solvency or capital structure test ratio. Third one, profitability test ratio. Number 4, operating efficiency or business activity test ratio. Dear students, now you have to know how many ratios are available in short-term solvency or liquidity test ratio. You can see in the screen, totally 4 ratios are available in the short-term solvency or liquidity test ratio. Number 1, current ratio. Second one, liquid ratio or quick ratio or acid test ratio. Number 3, current capital ratio or working capital ratio. Number 4, cash to current liability ratio. In the format of ratio, you can see in the right side standard value of each ratio. Standard value of current ratio is 2:1. That is, current ratio when is available 2:1, that is the satisfactory moment for business. As liquid or quick or acid test ratio standard value of 1:1, that is the satisfactory moment. If below 1, that is not satisfactory. Third one, current capital or working capital ratio, that is the standard value of 1:1. Cash to current liability ratio, that is the standard of 0.25:1. Dear students, you can write it in your accounting copy for your betterment, for learning the ratio standard. Okay, next ratio, number 2, long-term solvency or capital structure test ratio. Totally 4 ratios are available in long-term solvency or capital structure test ratio. And right side standard value is available. Number 1, debt equity ratio. In this ratio, standard value is 0.33:1. Number 2, equity to assets ratio. This standard is available 0.75:1. Number 3, liability to assets ratio. This standard is available 0.25:1. Last one, capital gearing ratio. Its standard is 2:1. Dear learners, you can see in the screen, third one, profitability test ratio. In this ratio, totally 4 items are included. Number 1, gross profit ratio. This standard is 20% to 30% in each business. Second one, net profit ratio. Generally 5% to 10%, but net profit before tax in case 10% to 15%, and in case of net profit after tax 5% to 10%. Third one, operating profit ratio, 10% to 20%. Number 4, return on capital employed ratio, 5% to 10%. This standard. Okay, dear students, you can write it in a hurry. Okay, fourth one, operating efficiency or business activity test ratio. In this efficiency, total 4 ratios are available. Number 1, stock or inventory turnover ratio. Its standard value 6 to 8 times. Number 2, receivable or debtors turnover ratio. Standard is 4 to 6 times. Number 3, payable or creditor turnover ratio. Standard is 6 to 8 times. Number 4, capital employed turnover ratio 3 to 5 times. Another ratio is available under the operating efficiency. Number 1, bad debt to accounts receivable ratio. Its standard is 5% to 10%. Okay, dear students, I have already given the standard value of each ratio. Totally 4 types of ratios are available in business activity. In this content, totally 17 ratios are given and a standard value given for your betterment for MCQ test. Now you can go to the second slide, formula of calculating ratios. Now you can open the page number 401, your accounting learning workbook level 2, and necessary data for calculation of ratios. For this one you can open page number 402. Dear students, I think you have opened the page number 401 for knowing formulas of calculating ratio. There are many ratios in this chart. Number 1, current ratio. Formula of current ratio is equal to current assets divided by current liabilities. Second one, quick ratio. Liquid asset divided by current liabilities. Third one, working capital ratios. Working capital divided by current liabilities. Cash to current liability ratio. Cash fund to current liabilities. Number 5, debt equity ratio. External liabilities divided by internal liabilities, that is owner's equity. Number 6, equity to assets ratio. Equity divided by total assets except fictitious asset. Number 7, liabilities to assets ratio. External liabilities divided by total assets except fictitious asset. Capital gearing ratio, very critical ratio. Common stockholder equity divided by fixed cost bearing fund. Number 9, gross profit ratio. Gross profit divided by net sales into 100. Number 10, net profit ratio. Net profit after tax divided by net sales into 100. 11, return on capital employed. Net profit after tax plus interest divided by capital employed into 100. 12, return before interest and tax on capital employed. This formula is net profit before interest and tax divided by capital employed into 100. Number 13, stock or inventory turnover ratio. Cost of goods sold divided by average stock, or net sales divided by average stock. If cost of goods sold is not available in the STEM or question, I repeat again, stock or inventory turnover ratio formula, cost of goods sold divided by average stock. Number 14, accounts receivable turnover ratio, that is debtors turnover ratio. Net credit sales divided by average receivables. Number 15, average collection period, 365 divided by accounts receivable turnover ratio. Number 16, accounts payable turnover ratio, credit purchase divided by average payable. Average payment period, 365 divided by accounts payable turnover ratio. 18 capital employed turnover ratio. Sales divided by capital employed. Assets turnover ratio. Net sales divided by total assets except fictitious asset. Number 20, current assets turnover ratio. Net sales divided by current assets. 21, equity assets ratio. Owner's equity divided by total assets except fictitious asset. Liability assets ratio. External liability divided by total assets. This is the last one for this ratio. Bad debt to accounts receivable ratio is equal to bad debt divided by accounts receivable. This is the page number 401. I have already read all the ratios in the chapter of 6. This is the name of ratio analysis. Now you can go in next page. Necessary data for calculation of ratio. Current assets. Which items are related to current assets? You know from the class 9. Cash in hand plus cash at bank plus accounts receivable plus bills receivable plus accrued income plus short-term investment plus closing stock or inventory plus prepaid expenses, etc. Current liabilities. Bank overdraft plus accounts payable plus bills payable plus dues or outstanding expenses plus short-term loan, dividend declared plus income tax reserve plus unclaimed dividend plus pension fund plus advance income plus source tax plus VAT payable. Number 3, quick or liquid asset. Current assets minus closing inventory plus prepaid expenses. Number 4, quick or liquid liabilities. That is the amount of current liabilities. That is the equivalent of current liabilities. Working capital. Working capital is equal to current assets minus current liabilities. Working capital is the another name of current capital. So current capital is equal to current assets minus current liabilities. Number 6, internal liabilities or equity fund is equal to share capital plus reserve and surplus plus dividend declared plus unclaimed dividend minus fictitious asset. External liabilities is equal to long-term liabilities plus current liabilities minus dividend declared plus unclaimed dividend minus fictitious asset. Gross profit is equal to net sales minus cost of goods sold. 9. Cost of goods sold is equal to sales minus gross profit, or opening stock plus net purchase plus direct expenses minus closing stock. Number 10. Operating profit is equal to gross profit minus operating expenses. 11. Net profit before tax, gross profit minus operating expenses minus interest, or operating profit minus interest. 12. Net profit after tax, gross profit minus operating expenses minus interest minus income tax, or net profit before tax minus income tax. Number 13, very important item. Capital employed is equal to total assets except fictitious asset minus current liabilities, or fixed asset plus current assets minus current liabilities, or fixed asset plus working capital, or share capital plus reserve and surplus plus long-term debt minus fictitious asset, or equity fund plus long-term liability. Number 14, average stock is equal to opening stock plus closing stock divided by 2. Number 15, average accounts receivable. Account receivable plus notes receivable. If opening is available, then you can divide it by 2. Average accounts payable. Accounts payable plus notes payable. If opening accounts payable is available, then total payable divided by 2. Dear students, I think you have already seen in your accounting learning workbook, page number 401 and 402, for knowing how to calculate the ratio and for necessary data for calculating ratio. Okay, from next class, I will solve the creative question for this chapter. Thanks for being today. Allah Hafiz. Assalamu alaikum wa rahmatullahi wa barakatuh.